The timing of Sequire's decentralized web conference could not be better. I mean, from a news flow standpoint, right? So as we look for market analysis of what crypto is enduring right now, where blockchain goes from here, and where we stand in the development of Web3 and, of course, the Metaverse, I cannot think of a better person to talk about it all than Bitcoin entrepreneur Brock Pierce. Great to see you, Brock. Thanks for joining us.
No, I'm glad to be here. It's so good to see you as well.
You know, we'd be idiots if we didn't start with cryptocurrency and Bitcoin. Obviously, I mean, we've had some serious panic selling lately. The first was a single week in May when the crypto market cratered more than 35%. Then, of course, the week of June 13th marked the second time in a single month, right, that the crypto market got caught in this vortex of the stock market going down. How do you, Brock, assess what's going on here and why crypto has endured such a violent sell-off?
Well, there's two things happening. One is that cryptocurrency is still a correlated asset. When the stock market's up, crypto's up even more. When the stock market's down, crypto's down even more. And so that coupling continues to exist. One of the promises of cryptocurrency is that there will be a decoupling, and that it will become a non-correlated asset class so that it can be a better hedging instrument. That's clearly not the case. And if you had asked me a year ago, with everything going on in the financial markets, everything going on with interest rates, everything going on in terms of war and otherwise, I would have said there's a pretty good chance that this decoupling would have occurred, and I'd be talking to you wrong today. So that's the first piece. Then the second part of it is we go through these cycles in crypto. We call them crypto winters. And whenever we're in one of the growth phases, there's a tremendous amount of building, everything is up, and you don't usually understand what the underlying problems are until the tide goes out. And these market corrections, when the tide goes out, you start to find other problems that had been below the surface, specifically in the growth around new stable coins like Terra Luna and UST. It was an experimental algorithmic stable coin. And this market correction caused that to depeg. I mean, there were other things that contributed as well, but if there hadn't been a major market move, we probably would not have seen the implosion of that. We're now seeing the same thing happening, something happening with Celsius that is sending a further shock wave through the market. So I'd say the financial markets movement changed the ground. It caused an earthquake, and now we're seeing continual aftershocks from it.
How long do you think it will take to get to what you just described as the decoupling? Because at the moment, not only do we see crypto moving on how the stock market is moving, but inflation has scared people. And then we also see exactly what people do in these times. They have lost some money in the market, maybe. They turn to sell other assets, and usually they'll go to the riskiest. Do you think that this is something that perhaps is going to take a long time to finally dissipate, or will people be so frightened for so long? Can you put a time limit on it?
Well, I would just add one other thing to your point. Sure. When people are looking to sell assets, yes, they look at the riskiest, but they also look at the most liquid, which puts crypto on that list of, kind of a cash equivalent. And so if you need to get money out of the market to address other issues, this is one of those places you look at because of its liquidity, which is very real. I'd say the devaluation of dollars and rising inflation rates is definitely going to make alternative assets, or an alternative asset class like this, a continual topic of conversation, as I think we are looking for places to park our money in times of uncertainty. We'll see if that conversation gets to a point where we start to see it at a significant scale, where we start to see that in the market. I mean, certainly these conditions, we are in a ripe condition for that decoupling to occur, for people to see this, a potential to see this as an asset class for a flight to safety at a time where you don't know where to go. That's up to the market, though. Right. The market makes those decisions. It's not up to us. But I would think that these are the right conditions for it. And I think that the topics of conversation that are going to be happening are going to cause people to they'll have this conversation around the dinner table more than they have ever before. I mean, with each one of these boom cycles, the market had gone from 1 million people to 10 million people to hundreds of millions of people. In the developed world, pretty much everyone has at least heard of cryptocurrency at this point. And so the next sort of big wave, the next wave of expansion, we go through expansion, contraction, could be the one that decouples us. And if I had to bet, I'd say that is the next big event.
Yeah, it's interesting, though, kind of ironic that the flight to quality this time around is to the US dollar, the opposite of the whole crypto thing. But I do just want to pounce on something that you said, and that is that the crypto haters don't seem to recognize that digital currencies are not going away. I mean, the user rate of crypto is growing at something like 100% each year. So as we look at all of this, and you did touch upon stable coins, that was kind of disastrous. It almost felt like a run on a bank. But Capgemini just did a high net worth individual survey about the investment preferences for emerging asset classes, such as digital assets, crypto, et cetera. 71%, and this included, I think, NFTs and the Metaverse too, 71% of those high net worth individuals who were surveyed said they have invested in digital assets. So that brings me to what has just happened in this crypto winter. How long do you think it lasts? And Bitcoin has gone from 69,000 at its highs November of 2021 to now $20,000. So that's a big hit. What is your prediction for Bitcoin by the end of this year?
Well, usually these crypto winters last a while, more than a typical season. And so if I looked at historic data, I would say that this is going to be a long winter. The only thing that might change that is everything else that's going on in the world. The global macro sort of conditions that I think might be very ripe for investors to see this as an alternative asset class for really security more than anything else. And that's up to the global markets. Bitcoin, I think we're probably nearing that price point in the low 20,000s, where if you look historically in the last cycle, this is where Bitcoin was around $4,000 to $5,000 for an extended period of time. It dropped down into the threes. It got up into the sixes. We might be in that, call it $4,000 to $5,000 band of where we were in 2018, 19. And how long we stay in this band, I don't know. We'll probably see lower lows, but I think that we've probably had most of the major corrections. There could be another staircase sort of step to go down that would find us into the high teens. But I think that a lot of the biggest things that would scare people off, or at least cause people to go into a mega sell-off, I think those runs on the bank have occurred, and it's been reflected in the prices.
Is this sort of a Darwinian process where a chunk of, because there are something like 19,000 tokens out there, where they will die either a quiet or, I don't know, a noisy death as digital currencies enter this next phase?
Oh, absolutely. This is entrepreneurship, right? This is technology and innovation. Right. It is absolutely survival of the fittest. And so many people are seeing the same market opportunity. Hundreds of groups attempt to try to win that market opportunity, and obviously most will not. And the thing that's different about this than historic markets is that it's all open source. And when things are open source, anyone can copy and paste code. You don't have proprietary technology that gives you a proprietary advantage. If you write the first code, if it's your idea, you invent it, the only advantage you have is a first mover's advantage. You don't have any of the other things that an entrepreneur would normally have by having been the inventor and the creator of the code. Somebody else that's better at community development can literally pick up your idea and say, look over here, and run with it.
Let's get to
so innovation moves much faster. Sure. As a result of those factors.
Absolutely. So let's dovetail to blockchain, the digital ledger, of course, that enables crypto to do its thing and obviously have transactions. It feels like it's way more entrenched in the regular economy, if you will, as industries are already appearing to really adopt it for things like supply chain management and financial transactions. What's the most exciting thing, Brock, that you see developing right now with the blockchain?
Well, the NFT space is clearly one that everybody should be following. Incredibly exciting. And the idea is that with these NFTs or non-fungible tokens, that everything can be tokenized. The title to your car, the deed to your house. And I do think that that's where we're going in this process of, call it digitization. The world is being digitized, and this technology is likely the winner. At least that's my belief. Well, and so we'll see that. And with art is the first thing that we've seen, art and video games, because normally that's where markets are going to emerge. Lower value items, creative items, the stuff that brings the culture, right? The creatives. And so that's the first big wave of implementation of this tech. If nothing else, I would encourage everyone to go out and buy your first NFT, but buy it like a piece of art that you're happy with it hanging on your digital canvas, and if you can never resell it, that you're happy with your purchase. If you're new to the space, I would not advise speculating. Think of it as a purchase and a sunk cost. And that's a good way to begin the process of learning. Obviously, the whole concept of Web3 is something that everyone should be paying attention to. It is as disruptive as it sounds, Web3. Web3 means it's replacing Web2. So the internet started as Web1, then we had Web2. And what happened is the ideas of what was possible with the internet through Web1 were really utopian, sort of idealistic sort of views. The reality is that Web2 happened, which is that major pieces of the internet were monopolized by big tech companies that look a lot like feudal lords. Web3 is the idea of the demonopolization of Web2, taking a look at Web1, saying, what is it that we really wanted to do? And with all of that we know now and all of the new tools, how do we rebuild the internet more in line with the original intentions? And so as you demonopolize Web2 businesses, what that means is you're taking all of the data, putting that data into a public database or a blockchain, right? Public ledger, where anyone can create an interface. The difference being, so take NFT.com, a project we launched less than 2 months ago, and OpenSea, for example. So OpenSea is a $13 billion marketplace for NFT transactions. It's a Web2 business, capitalized like a Web2 business, serving the Web3 marketplace. NFT.com's idea is that the Genesis key holders or the token holders of NFT.com are going to be the beneficiaries of all the value created. So the idea where the VCs get all the money versus one where the community earns all the money is a model that I think, given a sufficient amount of time, is unstoppable.
Right. Well, yeah, let's just clarify a couple of things, because we've got literally Sequire invited millions of active small cap investors, and they're very, in some cases, new to this. So rather than consumers accessing the internet, say through Google, Apple, or Facebook, individuals themselves, you got individuals governing and owning sections of the internet, and the transactions can be really quite dramatic, I think. When you talk about Web3 and NFTs, and I think it's great advice to say, buy what you love, because it'll take a while for this market to really germinate, possibly. I mean, I'm like, okay, I want dogs playing poker on Velvet. I mean, that's my thing. So we go out there, now you're going to get that on NFT.com. But this truly feels as if the original seeds of cryptocurrency are pollinating into the internet. Technically, Web3 is supposed to better protect users' privacy. Is that assumption correct, Brock?
I mean, it's technology, so it depends on how you design it, right? And technology is a tool. It's neither good or bad. It's amoral. How you implement it is what determines the impact it'll have. And so, yes, privacy should be, at least the things that I support and build are protecting life, liberty, and the pursuit of happiness. I buy into those American principles, near and dear, and I try to apply them to everything I do. And so, yeah, the thing that you said there, I think, is the point that I'd focus on. No one was able to own the internet itself. You were able to own businesses that were using the internet or built onto the internet. So TCP/IP, or the protocol that makes up the internet, cryptocurrency in many ways is the ability to actually own economics in the underlying protocols. Think of these cryptocurrencies like shares in the protocol that makes the internet, or email, for example. You could own email as a protocol or the tool that settles those things. And so it's a new investor opportunity to participate in underlying infrastructure that we were not able to profit from historically. And it's very democratized in a way where everybody's got equal access if you do the work. And I think that as smaller investors, we're the ones that are best positioned to benefit from this. It's going to be harder and harder for the largest investors to participate in some ways. So that's Web3. That's Web3.
Although, Brock, you would agree that the larger investors are pouncing and investing into this. The venture capitalists are in there. Maybe some of the people watching this conference are thinking, let me get into this. Does your spidey sense go up at all when the big corporations and the big financials say, oh, let me get in on this?
No, not at all. I think it's open to everyone. And so we want to welcome everyone. The difference is our traditional markets operate from, call it 9 to 5 on weekdays. These markets never sleep. They operate 24 hours a day, 365 days a year. And so institutions by their design and structure and their governance are not in the same advantage that someone that can invest on the behalf of their own account. When you're able to invest directly and make decisions for yourself, you in theory should be faster and more nimble. And hopefully that accrues to your bottom line.
Let's get to the metaverse. We don't assume everybody understands what that is. The metaverse, of course, is a virtual world where individuals live, work, play, do business under avatars. Meta, formerly Facebook, I mean, it's completely realigned its strategy to embrace the metaverse, right? And profit from it. How involved are you in the metaverse, Brock?
Well, I've been living in the metaverse and working in the metaverse since the late 90s. This is not a new thing. It's been in science fiction novels for a very long time as we leave the singular verse, into the meta or multiverses. And so they were very popular in the form of online games, massively multiplayer games, Second Life, World of Warcraft. This is where I got my start. Right. And I was the main market maker in all those digital currency markets for thousands of metaverses or virtual nations. This iteration of an industry that has existed for some time, the difference is it's going from Web 2 to Web 3. It's going from being a closed loop system to an interoperable system where I can take my assets from one world to another world. And that's because the rules of the game have changed. And that is that the builders of these systems want you to be able to profit or benefit from living in the metaverse. When I was the main market maker in World of Warcraft and Second Life and all of these things, other than Linden Labs that made Second Life, the game companies didn't, or the metaverse operators didn't want people to be able to profit from their time in these spaces. They didn't want people to be able to buy and sell because they didn't know if it was a good thing or not. It turns out that this idea that you can play to earn and that you can do well while having fun at a time where the landscape of work is changing and all of this uncertainty, COVID certainly, I think, has helped contribute to this boom in the metaverse cycle in the same way that Netflix and Disney benefited. We're looking for alternative ways to spend our discretionary time safely at home. And so this is another one of those big cycles. The metaverse is absolutely real. It's the future. It's my view, though, it's going to take a lot longer to reach mass adoption than I think people estimate. The Oculus glasses from Meta, at least now you don't need an expensive computer. So the barrier to entry for the virtual world version, some of it is our 2D that you view on your screen. But it's exciting. If you haven't seen the movie Ready Player One, just go do that, and that'll help you understand what the future looks like, at least one version of it. And but we're still a ways away. But the companies that are building that infrastructure today are very possibly going to be the ones that operate the systems like you see in that movie. And that's probably where Mark Zuckerberg's inspiration came from.
Well, let's just tackle Mark Zuckerberg for a moment. They say, obviously, he is very early on this when it comes to overhauling an entire publicly traded company and its focus. His stock has gotten hammered, down 50% since, I believe, year to date. But it hasn't exactly been adopted by shareholders at the moment who have their focus on other things, or they think, what is he doing? Sometimes being too early, Brock, is as bad as being too late to something. When will he sort of get his due and be seen as sort of this mass visionary? I'm guessing you already see him that way.
Well, I mean, clearly he's a visionary, but I don't agree with the direction that he made. I think he went too early. I think he bet the farm too early. I mean, as an entrepreneur, when you're a small business, you have to go early. You have to take that risk.
Yeah.
When you're a big public company, you're generally more risk averse, and you're waiting for more data. And you have such a competitive advantage already. They owned Oculus. They were already well positioned. I'm not sure they needed to make the full pivot until they had some at least traction. How is Facebook's Meta doing? I mean, I guess if you made this whole rebranding as a marketing push to try and get your user base or your customers to adopt your new technology, that's one strategy. But to change your entire focus and message and brand of your company before you have any revenues or traction seems a little. It seems like you went too big too early, and you don't have to. As an entrepreneur, you have to take those risks. When you're one of the biggest big tech companies in the world, you don't have to make that transition so early. I think you can wait until you have a little bit of meat on the bone before you go all in.
You know, can you just sort of fast forward people who are watching right now into a little bit of the future? I mean, I agree with Brock. You guys, you have to look at Ready Player One with starring Mark Rylance. I mean, it was just done by Steven Spielberg. Fantastic. I mean, I was sitting there saying, this is really going to happen someday. Well, now I think there have been some surveys. I mean, in 5 years, people are saying that they would use it in some way, shape, or form. Capgemini did a survey. So did McKinsey. 60% of all consumers surveyed prefer at least one activity already in the virtual world. But how far do you see this going, Brock? I mean, there's some who believe you'll be able to go to a doctor's appointment in the metaverse, although I'm pretty sure you wouldn't want to wear your little dinosaur avatar for that one. But in your wildest dreams, call it right here. How far does the metaverse go?
It does take us all the way. It's just a matter of how long does it take? And I think it's not going to be this decade. I think we're going to see a lot of that infrastructure in place, but we're already seeing it with medicine, right? Telemedicine is the answer to a lot of our doctor's appointments. You know, the idea that I can have a conversation like we're having right now, you know, a lot of our doctor's appointments can be done this way. And all of a sudden, then you have access to all the world's specialists, right? You don't have to just find that doctor that happens to live in close proximity to you. The entire world becomes available. And I think that that's a great thing for us collectively. And so these things will take time. The technologies, though, are there, whether it be Zoom for things of this nature, or the metaverse, sort of more immersive 3D virtual worlds that are coming, and everything in between. What we've learned is that human beings are able to interact digitally and get a lot of the value that we would normally get when being in person. Obviously, close human connection in reality is still very important. I'm a huge advocate of it, but the benefits of being able to interact and connect with someone anywhere in the world is a pretty compelling value proposition as well. And then to do it as a dinosaur, to bring in Westworld, right, to add the fantasy layer of being able to then go interact in whatever version of the universe or metaverse you want to be in, whether you like to, the Wild West, or you want to be in Jurassic Park, as the case may be. All of those things will likely be available to you. And the ones that appeal to more of us, like Lord of the Rings fantasy and sci-fi, normally are the first to go.
We're talking so much about this new technology, Brock. I mean, with crypto, blockchain, Web3, the metaverse. Let me bring a dose of reality into this conversation. Whether it is, crypto or the metaverse or Web3, it all promises to be this hive of economic activity. And in some cases, it already is, right? People are already setting up businesses that operate in the metaverse. And I had referenced the McKinsey study, global spending in the metaverse could reach, they say, $5 trillion by 2030. How is this world gonna be taxed in the real world? Because you and I both know, you name it, if it moves, the government wants to tax it.
Well, I was in the Capitol yesterday, and I was talking to call it some of the Senate, and before that, some of the House. And the current Senate bill that's been put forward, because you have to look at this jurisdiction by jurisdiction, right? Taxes are jurisdictional. So let's focus on the U.S. The current bill that's been put forward says that transactions of $200 and less would be non-taxable. They would be treated like cash in terms of retail, so that you could use cryptocurrency to buy a cup of coffee and not having to worry about withholdings and things of that nature. I love that aspect of the bill. I think that really makes cryptocurrency convenient and something that we can use in our day-to-day lives, at least at that subscale. Otherwise, it's going to be treated like everything else. Short-term, long-term capital gains, that depends on where you live and what the current rates are. And from the tax man's perspective, this could be a very exciting development. You know, as things become more and more digital.
Believe me, I'm sure it is.
you can start to automate things. You know, smart contracts. You can have taxes automatically withdrawn in the point of sale system at the time of transaction. So speed and efficiency of the tax collector getting what's theirs may improve immensely as a result of this technology. We call it, reg tech, right? Regulatory technology. It's an entire new investment category of where technology as a tool can automate compliance, can automate regulation, can automate tax deductions. And so if I'm a tax collector, I would be excited and spending a lot of time trying to figure out how this works, because this might make your job a lot easier.
Prediction time, Brock. I want to take it back to crypto here. Can you rank in order? And again, this is fantasy time, not going to hold you to it, but if you were to predict, in what order would these coins and tokens survive within 5 years? So fast forward to 5 years. Let me throw in there Dogecoin, Litecoin, Bitcoin, and Ethereum. Can you order those in who's going to be the strongest in your mind if it were 5 years from now today?
Well, Ethereum clearly is there today, and they are in the midst of a major overhaul or upgrade from ETH to ETH 2.0. If this transition or upgrading of that system works out and works well, Ethereum will be in an incredible position 5 years from now. That's really the big gating item. Dogecoin doesn't really have much in the way of technology that differentiates it. It's entirely community. And so value is a shared belief system, right? Value is derived from two or more people agreeing that it has value, which we might agree because it's got utility or social status. And so for the first time in human history, we get to decide what we ascribe value to. And Dogecoin is one of the most interesting examples. Really nothing technical there that differentiates it in any way, but because a bunch of people find it cute and interesting and they're members of that community, it has value. This is one of the greatest social experiments. And so that really depends on that community and its development, because it doesn't really have much in the way of technology. Litecoin, even less so in terms of technology. Really, it's a silver to Bitcoin's gold. I'm not sure in a world of digital where we need different denominations, right? We don't need gold, silver, copper, nickel, because it's digital and you can fractionalize it down to a small piece. So I'm not sure I buy into the Litecoin value for this proposition long term. So I'd say that Ethereum's got the best chance. Dogecoin, don't bet against the people. Shared belief and faith in something, community. I'd say Dogecoin has probably got a better shot than Litecoin for that reason. Litecoin is really more of a speculation thing, and speculation as other instruments emerge, I think is probably less compelling. And most importantly, this is a lot like the internet in 1999. Most all of these things will be gone, like the big the bubble bursting of the internet in the spring of 2000. We did end up with eBay. We did end up with Amazon. We did end up with a bunch of really important companies, but 99 out of 100 of them failed during that major market correction. I'd say over the next 5 years, it may not be 99% of projects, but it's going to be more than 90% of the projects that are here today will not be here then. And there will be new things that emerge that don't exist yet that are going to probably be the biggest of things.
The future is exciting. I want to end with this. We have talked a lot about making money off it, developing it. The real world application, the number one application you see one or all of these technologies being able to solve. We have major problems on this planet. Brock, I know you're passionate about certain things, but bring it all together in this last minute.
Yeah, it's I don't like to be the bearer of bad news, but the thing that is, I wake up every day and multiple times throughout the day and every night, the thing that's weighing heavily on me in the world right now is food security. Not everybody's been following this as closely as they should, but food production on planet Earth is down something like 35%. I don't know if anyone's seen that movie, Don't Look Up, but we have something similar to an asteroid coming at planet Earth right now, and that is going to be massive food scarcity. This came from disruption to supply chains as a result of the pandemic, but a lot of it from the war that Russia is waging on the Ukraine and the impact that's had on accelerants or fertilizer coming out of Belarus to Ukraine, Russia, the breadbasket or the wheat and grain that usually comes there that's trapped in the Black Sea, accelerants that would have come from Canada to Brazil ended up in China. So the breadbasket of the earth, Brazil didn't get what they need. And so we have a major, major problem. It's very real. It's happening right now. We're already seeing the beginnings of famine in Sri Lanka. Those problems combined with inflation are going to create some serious food problems in the world, especially for places like Africa. And it's worth noting that 70% of all the food in the world is wasted. And so technology, like right now, if I were in a position, today, what I would be doing is convening all the world's leaders at Davos. This is what they should have been doing, and all of the world's industry around shipping and otherwise, and saying, how do we drive efficiency as quickly as possible? Winter is coming, and we're looking at major problems, global famine, which leads to civil unrest that can lead to genocide and all sorts of terrible things. How do we drive efficiency? We waste 70% of the food. Food production is down 35%. If we could drive efficiency in the market by 50%, we've solved all the problems. It's June. It's a little late for that, but it's not too late to do something. Every little bit counts. If the Turkish president can get those containers out of the Black Sea and get that wheat moving, that's going to impact the lives of millions or tens of millions. This is the conversation, and technology has a role to play in this. Supply chains, tracking, greater efficiency. How do we waste less? How do we get it where it's going quicker? How do we account for it? How do we know where it's coming from? Less blood diamonds, all that sort of stuff can be done with this type of technology. And I'm not sure how much of that could be implemented to impact this winter, but I imagine we could do some. And certainly, if nothing else, this should be the catalyst to drive the upgrading and the digitization of systems to create a better world that works for all of us.
Brock, you are a very big thinker, and I really personally appreciate what you have just talked about in this last amount of time. And I want to thank the Sequire team for landing you and the SRAX team. This is an amazing opportunity for all the investors participating in this conference to pull the top of your head off and look in and see what you see. You have been a proven success, obviously, as an entrepreneur, as a Bitcoin believer, and now talking about everything else, Web3, the Metaverse, and hopefully solving the problems of the future. Thank you so much.
Thank you. It's so good to see you.
Great to see you too.